Nitin Rakesh, CEO at Mphasis, and Manish Dugar, CFO, joining in on the show right now to talk about how their quarterly performance was. Nitin, hi, going to start with you. It was a bit soft quarter, right? How was the demand environment? Has it changed since the last time we spoke? And any weakening in the outlook you foresee?
We probably were early off the blocks in terms of some recovery. We had a pretty decent sequential growth last quarter in the overall business as well as in direct. We've had a second sequential growth in direct this quarter, led primarily by banking last quarter and more broad-based in Q1. I think that's kind of the big, headline for us is we are seeing good growth coming back in the BFS business, and that, as you know, is half our business. Second, I think we have seen also return to growth for our top 10 accounts. Sequentially, we've grown about 1.2% top 10. Top 5 have grown. Next 5 have also grown sequentially. I think the YOY numbers and the LTM numbers will take care of themselves as the sequential growth pattern continues forward. We've had 3.5 or so growth in the next 20 accounts. So I think that those metrics are pretty strong. New clients have grown at about 22%. TCV wins are up nicely, given that we had a couple of soft quarters, but we were able to convert pipeline. But the most interesting metric for us, which is the lead indicator, is client conversations have picked up. I wouldn't say that discretionary spend is back or we are in an era where clients are happy to spend. They're still cautious. They're still very value-oriented. Cost is an important item, but they've added another dimension to cost, purely based on folks like us who've gone back to them and said, while you're looking for cost savings, could you also think about applying new tech and finding, opportunities to transform while you save cost? So we launched a whole savings-led transformation thesis, and that's been well received. Our pipeline is actually up 17% QOQ, which is, I would say, the biggest jump we've seen in pipeline in the recent past. So pipeline is also very broad-based. BFS is up. Non-BFS is up even more. If you look at the non-BFS pipeline is up 25%. Banking, we've seen some good conversion. Top 10 account pipeline is up 30+% sequentially. So I think it's a pretty broad-based recovery in pipeline. That, as you always know, is conversations lead to pipeline. Pipeline leads to TCV. TCV leads to revenue. So I think we are cautiously optimistic that we've now put a second dot. Could the growth be stronger? Absolutely. It always can be. We still have some soft spots, in a couple of units, but, Europe grew 10+% YOY basis as well. Insurance has grown really smartly, both YOY and QOQ. So I think we're taking care of issues one by one, but the two big items that we had, really been, headwinded items we've been facing last year, BFS and top accounts, definitely back to growth.
Right, Manish. So given the revenue tailwinds that Nitin alluded to, is it fair to say that you're sticking then to the margin guidance?
Absolutely. Given the philosophy of investing for growth while maintaining margins in a narrow band, we are always, capable of dialing up and dialing down the investments to ensure that the margin gets delivered. The fact that we are, above the 14.6 for all the last 2-3 quarters, and we are now actually at 15 versus 14.9 last quarter, goes on to say that we do see tailwinds to the margin, and despite making the desired investments, we are able to deliver above the lower end of the guidance. As we go forward with revenue scaling and with operating leverage playing out, other than benefits coming from exchange gain losses going away, etc., we seem to have a reasonable amount of tailwinds to continue investing while delivering a reported margin, which is well above the lower end and certainly in the band.
Right. Nitin, do you stick then with your guidance of achieving industry-leading growth in FY25? And if yes, what's giving you the confidence despite a soft Q1?
Absolutely.
Yes, absolutely. I think we are staying with the previous directional guidance, and primarily driven by the fact that top accounts are showing signs of growth. We've delivered already the growth number metric in Q1. We've also seen pickup in BFS for 2 quarters in a row now. It grew over 1% sequentially this quarter. I think the only variable from an upside surprise perspective is what happens to the mortgage business, even though it's only 6-7% of revenue now. But it definitely, we're not baking in any major uptick there. We are seeing some gradual recovery, but it's nothing to call out at this point, given that we really haven't seen any major change in the interest rate environment. So I think we're still calling and expecting that we will be above industry growth.
Right. Nitin, deal wins have been fairly robust, and you said that this is broad-based, but can you give more details? What is the nature of these deal wins? How is it changing? And more importantly, what kind of a role is AI playing?
Great question. The nature of deals is, last quarter we had seen a slight pickup in shorter term duration deals. I think that was more driven by the fact that clients were still a little bit uncertain, so they started with smaller projects, didn't really want to commit for long term. This quarter, we actually have 3 large deals. One of them is over $100 million deal. So that definitely is a step in the right direction, because now we are starting to think about transformation at scale. We've also seen AI-led transformation deals that as I called out, savings-led transformation thesis. We've actually increased our investments and our go-to-market efforts in infusing both AI and Gen AI-led deals. For example, in areas like modernization, experience transformation, AI-led IT operations, AI-led business operations. So a third of the pipeline right now that we are reporting in the current quarter is actually pure AI-led. We expect that number to continue to grow, but given that we've seen a pretty big jump in the pipeline sequentially, I think that's trending in the right direction. It's not just about the investment in people and talent and partnerships and ecosystem. It's also about actually going ahead and orchestrating these solutions.
Right. Manish, lastly, how is it that you have the pricing and the hiring trends shaping up over the last few months?
Given most of what we do is proactive and 93% of the TCV wins in this quarter were proactive, we are effectively shaping the solution and we are bringing to the client that they haven't thought before. So the conversation is largely on value, not so much on price. And hence, we are able to ensure that while we deliver what the client's expectation is, we are able to make the desired profitability that we want. Having said that, the environment on pricing, if I were to look at maybe 2 quarters back versus now, there has been a change. Obviously, the demand environment is not that strong, and because of that, there is a bit of pricing pressure that has come in. But like I said, given the kind of work we do, we are able to get the profitability that we want. From a headcount perspective, it's been a while since the whole industry has been looking at non-linearity, and automation, AI, all of those do help in that process. Across the industry, if you look at it, the headcount growth has been much lesser than the revenue growth, and that's not very different for us. In fact, if at all, it is a little bit more for us, given most of what we do is transformative in nature. And that's what has been borne out over the past few years, and we expect that to continue as we go forward. So from if the question was in terms of what's the expected hiring or what's the expected number of people we will onboard, that's more of an outcome depending on what's the comfortable level of utilization we want to maintain to ensure that we can deliver to the client needs and not leave any revenue on the table. And we feel comfortable about the supply environment at this point in time to be able to do that as the demand picks up.
All right, gentlemen, thank you so much for taking time out and giving us a little more clarity as to what the targets are for Mphasis as well as the outlook. So yes, margin tailwinds, despite making investments, the deal pipeline has seen one of the biggest jumps, and as of now, the new client additions continue to be robust.
If you like this video, then like, share and subscribe to ET Now.